All right, so another very interesting week in the markets. The big news from this past week, I think obviously Bitcoin I believe almost hitting a new all-time high in US dollars. It crept over 124. At the time of me making this video, it's around 122. However, it is the night before, and it's gone up significantly 3 straight days. So for all we know, we could be already at an all-time high. I want to talk about that. I want to talk about the stock market. First things first, if you get value out of the video, please like and subscribe. Check out the links below as always. So let's get right into it. I want to talk about stocks first because we hit a new all-time high on the NASDAQ and on the S&P on Thursday. Friday, kind of a mixed day, but we still closed the week up nicely. About 1% on the S&P, 1.2 on the NASDAQ. Small caps are up nicely. They're up about 1.2 and then about 1% on mid caps. The international markets actually did very well. The iShares, the main international market, was up about 2.5%. So very good there. But the big news as far as the stock market goes this week was the government shutdown. Now, I think it's obvious the reason the market shrugged it off, because everybody knows that, number one, they're almost certainly going to either pass a new bill to increase the debt, or they will simply just pass a continuing resolution, which I believe just kicks the can down the road. I don't know exactly how that works. But the other thing, too, is that they're not actually shutting the government down. They're just shutting down non-essential stuff, which, frankly, I think the government could cut spending by 50%, and within a matter of, a year or two or three, people would forget that it happened. So I'm not the least bit concerned about a government shutdown. I did say last week that I think the stock market can hit, or the S&P, I mean specifically, can hit 7,000 by the end of the year. And I still stand by that, because we're overwhelmingly likely to see one rate cut, and I think we're still even more likely than not to see 2 rate cuts before the end of the year. So when you look at that, almost certainly with loosening liquidity, with obviously more money coming into the system, it's very likely that the stock market trends up. Now again, you have to be the caveat is the market is clearly expensive, right? It's clearly overvalued right now. I don't think it's by much. There's a lot of people talking about it's this massive bubble that we haven't seen in decades. I don't believe that's the case, because when you look at the growth of the stock market, or of stocks, they're growing at a faster rate than they arguably ever have, right? I mean, people compare it to the tech bubble. Like, a lot of these companies weren't even profitable that blew up after the tech bubble. Like I say, like Nvidia literally is like tens of billions of dollars in earnings every quarter. Like, yeah, they're overvalued, but they're growing. And not to mention, too, they're still growing they're growing like 20%, right? So I think that it's fair to say, again, I'm kind of in the middle in that I think it's fair to say the market's overvalued, but I don't think it's crazy overvalued. I would say the fair value of the S&P right now is maybe 10% lower than we currently are. Like, I think it's fair to say that the S&P should be trading at probably a 20 PE, maybe even slightly higher. And the reason for that is when you look at the PEG ratio on the S&P, which is price to earnings divided by the growth rate, it's actually only slightly higher than like the 10-year average. I think it's like 1.3 and the 10-year average is like 1.2. So I don't think that we're crazy overvalued. And again, we're going into a loosening cycle. The Fed probably pivots. I don't know if they actually already have, but they're probably going to be pivoting to QE from QT, which they were doing up until very recently. So all those things considered, it's unlikely that we see a significant sell-off. My prediction is we probably see something similar to last year, at least insofar as I think that we'll continue to grind higher going into the year end, and maybe even to start next year. And eventually, whether it's inflation, whether it's the jobs market, that probably causes the Fed to say, "Hey, we're done cutting." And then if it's a bad jobs market, if it's inflation, maybe it's something Trump does, who knows, that will cause, a correction, right? I think that that's overwhelmingly likely. That's my best guess. I think that the most likely scenario is we continue to grind higher, although at a slower rate than we have over the last 6 months or so. And then probably, first, second quarter of next year, we see a nice pullback. But then we close the year probably up slightly, right? That's my best guess. Another thing a lot of people talk about is, we're going to see some big crash. And it's like, more likely than a big crash is the stock market simply trades sideways for a year. Like, if you had to bet on like a 30% plus crash, or we chop sideways for a year, I would be betting on we're gonna chop sideways. So that's just my thoughts on the stock market going forward. Michael Saylor, Strategy has acquired 196 Bitcoin, 113,000 a coin. As of the 28th of September, we hold 640,000 Bitcoin, 73,983 a coin. So why am I bringing up this number? This number is important because this takes them over 3% of the total. Sorry, not 3%. 3% of the available supply, which is absolutely insane, right? That's absolutely insane, and I don't think people are coming to grips with how significant this is, right? This is so significant it's not even funny. And when Bitcoin is in the millions of dollars a coin, and every company is, or at least most companies, are trying to buy it, what's going to happen? I mean, they're either going to have to pay a massive premium to someone like Strategy to buy it, or they're going to pay a premium to someone else, and the value of Strategy is going to continue to go up. So I've said time and time again that I think this is going to be one of the most valuable companies in the world. They already are roughly the 100th largest company in America. So they've came this far. What makes you think they can't come even further? So this is important. And I have said it time and time again that what they are doing, like, we're going to look back and be like, this is like Warren Buffett, but even better. Because, I mean, all Warren Buffett did was find a way to beat the stock market, right? Like, Michael Saylor is going to find a way to beat the stock market, like, easily, and virtually guarantee that he's going to do it over the long run because, number one, Bitcoin will always outperform the stock market over the long run. And number two, he's got the preferred stocks, or the preferred shares, that are going to guarantee him a way to buy Bitcoin at a discount. Right? And this is something that people don't understand. Right? A lot of people say, the people that don't understand Strategy, and they're like, they're just issuing shares to buy Bitcoin. And it's like, that's technically it's true. But it's very misleading at the very least. Or typically it's just people that don't know what they're talking about. A lot of times these are TradFi people that should know what they're talking about, but they don't. And the reason they don't know what they're talking about is even when they issue shares of MSTR, they are getting, like, they traded an MNAV of like 1.5, which means they're getting Bitcoin at a discount. Right? The only way that they're actually diluting people to buy Bitcoin is if their MNAV is below 1. That's the only way that they're diluting people, because if you're above 1, that means that you can issue $1's worth of shares and get $1.50's worth of Bitcoin, which if Bitcoin continues to go up at 20, 30% a year, your stock's going to go up probably 20, 30, 40% a year, and the shares is less than that. Right? The shares is less than that because the MNAV is over 1. And I haven't even gotten to the point to where we introduce Strife, Stride, and Stretch. These are preferred shares that allow them to buy Bitcoin, and all they have to do is pay the principal or the dividend on these shares. They don't have to pay the principal. They just have to pay the dividend. I misspoke there. So they're paying a dividend of, 8 to 10%. And all they need to make money on that trade is for Bitcoin to return more than 8 to 10% per year. And they're literally printing money. Like, they're literally printing money. Like, this is like what the banks are doing, but even better, right? The way banks make money is they create money out of thin air, and that you pay them the interest. That's how they make their money. But banks are like, take mortgages, for example, right? Now, typically banks don't hold mortgages on their balance sheet, but to make it simple, let's just assume they are. They give you a mortgage at whatever, 4 or 5% interest, right? And the other thing too with that is that when it comes to mortgages, there's a chance you default, right? I mean, technically there's a chance that strategy defaults as well. That's true. But again, the likelihood of Bitcoin returning less than, 8 to 10% a year over the long run is very low. So what they're doing is exactly what banks are doing, but they're doing it in a better way, because they're honestly, over the long run, they're taking less risk. Again, now some people view that as controversial, but I don't care, because look at how well they've done so far, right? Like clearly they're onto something that a lot of people aren't. So the next thing here is from Jeff Walton. MSTR will record its second quarter in a row of positive earnings. Q3 net income, $2.9 billion, $10 a share in earnings per share, 22.8. So, I mean, that puts them, right? I mean, $3 billion of earnings. That's pretty good, right? That's pretty good. So again, we're going to have to see how, I think it's like the first or second week of December, the next S&P rebalancing announcement. When you look at the two stocks, AppLovin and Robinhood that got in last time, both of those were denied its first time being eligible. I know Tesla was denied the first time too as well. So it's not necessarily something that's uncommon for companies their first time trying not to get in. And if it happens, I don't think it's a matter of if. I think it's a matter of when. Now, again, it could be a year or two from now for all we know. But when it happens, that's going to be tens of billions of dollars of passive flows. And not only is it going to be like, whatever, 10, 20 billion of passive flows almost overnight, it's going to be a guaranteed billions of dollars a year. Again, it won't always be that much, but on average, in passive flows. Right? There is so many people that just every week, every month, every paycheck, whatever, they just buy X amount of the S&P. And that's not going to stop, right? That's not going to stop. And it's only a matter of time until strategy is in the S&P. And another thing that's important too is that strategy is a relatively large market cap, right? I mean, they're already in the top 100-ish companies in the S&P. It's not like they're 490 and they're going to make up like 0.0001 of the index. They're going to be a small amount, don't get me wrong, but they're going to be a larger position than most companies are when they get in. So that's really important as well. Altcoin Daily. 1 year ago, Bitcoin was at 60,000, right? So we're up more than 100. We're officially up more than 100% over the last year, and not to mention too, I think we're up roughly 1,000% over the last 5 years, right? I remember. I think it was summer 2020, roughly that we went over 10,000 US. So we're up 100% in the last year, and yet a lot of people are really bummed out. Now, again, don't get me wrong. I thought we were going to be at 200,000-300,000 a coin. Don't get me wrong, but I don't see how we can be bummed out after being up 100% in the last year and 1,000% in the last 5 years, right? I mean, like I said, obviously we thought we were going to be higher, but it's kind of unreasonable, I think, to be overly bummed out. The next thing here from Mark Moss, when Stretch hits $100, the game will officially be on. Everyone in the world wants this product. For now, it's marketing for them. Robinhood adding it today was a big step in the right direction. So Robinhood officially added the MSTR preferred shares, which is huge because I think they have 25 million users, which is just huge. And this is just going to mean more money flowing into the preferred shares, which is just going to mean more money flowing into MSTR for them to buy Bitcoin. Right? So I've said time and time again, and Michael Saylor is the first one to bring this up, so I'm not some genius necessarily, but this was their iPhone moment, right? We're going to look back at this and be like, this was one of the biggest pieces of genius we have ever seen, because it guarantees them, or not 100%, but 99.9% guarantees them a guaranteed way to buy Bitcoin every single week, every single month, and thus will over the long run will continue to pump their stock, which will continue to make people even more rich who are in the space, which, again, it's just going to be this vicious cycle that never ends. And in my opinion, STRC and STRF specifically are an absolute must own. Now, again, they aren't on a lot of platforms. That's one of the problems, but it's only a matter of time until every platform has them. Like, they're going to be stupid not to do it. I mean, when you look at STRC, it was the largest IPO of the last year. Like, we're not talking about chump change here. Like, we're talking about products that are already worth, I believe they're worth $6 billion. And again, that's with them just getting on Robinhood. That's with them still not being on a lot of big trading platforms. So STRC and STRF are both top 5 positions for me, to be clear, at least in my growth portfolio. And that's not going to change. My long-term plan is number one, to use Stretch as mainly a simply like a way to hold cash, right? I mean, every single spare dollar I have will be put into Stretch. Strife, pretty much the same. Strife, probably I will use a little bit more long-term focus. The difference being is that Stretch pays dividends monthly, Strife pays weekly. Technically, Strife is higher up on the capital stack, so technically it's less risky. However, strategy is pretty much designing Stretch to trade at, roughly $100 a share, right? Within a couple, 2-3 percentage points. So if it goes above, they'll lower the dividend. If it goes below, they'll raise the dividend, which is how they're going to keep it around $100 a share. So this is a product that, again, it's going to give you a guaranteed, again, nothing's a guarantee, but virtual guarantee of a 10% return per year. And not only that, you can trade options on top of them. You can sell calls and get an extra 2-3% per year. So in reality, you can get a guaranteed 12 or 13% per year. Like, who in the right mind is not going to take that? Right? Who in the right mind is not going to take that? So that's why they will always be top positions for me, right? I don't ever see that changing, right? For me, it's going to be S&P, NASDAQ, MSDR, STRF, and STRC. That is the exact, that's not necessarily the order. Technically, I own BITX and MSTX as well. I trade on those, but that's going to be my top positions. Like, the S&P will always be in there. Now again, the weighting may change, but the S&P will always be in there. The NASDAQ will always be in there. STRC, STRF will always be in there, and MSTR. Now again, I'll always hold like some mid caps, some small caps, an international fund. Those are must owns as well, but not to the same degree. So, like I said, what strategy is doing with these products is absolute genius. And again, the reason for that is nobody in their right mind is going to keep leaving their money in a savings account or in T-bills when the interest rate you're getting is less than half. And now again, that might even be generous, less than half of what you're getting here. Why would you do it? Right? It makes no sense. It'd be one thing if the interest rate was like, 50 basis points different, but we're talking about 500, 600, 700 basis points. Like, that is a very large amount of money when you do it over a long period of time. And the last thing here, XRP in disbelief that Swift is going to build their own blockchain instead of using Ripple. Now, I talk about this because, I've talked about it before, but when it comes to altcoins, there is no altcoin in existence that is going to compete with Bitcoin, and it's not even close. I've said it time and time again. I'm not the first person. I'm not going to be the last person. I'm not some genius when I say this because in my mind, it's obvious. But when it comes to altcoins, they're almost all built on hype, right? This is a prime example. Now, again, when it comes to the whole XRP Swift debate or Swift issue, is that it makes no sense, because when it comes to SWIFT, the reason that SWIFT wants to go away, or that countries are leaving SWIFT, China and Russia to be precise, is not that they care about being able to transact faster. Now again, that might be nice, but that's not the main reason. The main reason is that they don't want to be censored. And using Ripple or using XRP specifically is not solving that problem. It's not, because XRP is run by, is operated by a corporation. There's founding people. There's individuals that the government can sue. There's a corporation that the government can go after. Like, it makes absolutely no sense that they would use XRP. Absolutely no sense, because the reason that they're going away from SWIFT in the first place, like I said, is that they don't want to be censored. They don't care about being able to transact super fast as much as they care about not being censored, which is probably why they're going to use their own thing, right? So that's the last thing I wanted to bring up. If you liked the video, please like, subscribe, comment, check out those links below, and stay tuned for more.